All right, the first order of business, let's look at the trend. We want to find the trend this morning in gold and crude. Crude is down. We take no longs on crude oil, only shorts. Hey, Matt. Hey, Bob. Hey, Jeannie. Gold, we take no shorts. The trend is up. It's the first order of business. Okay, let's go in crude oil. Let's check it out. Let's check out the signals this morning so far. We say start at 7:45 in the morning. Sometimes you're done by 9 a.m. in the morning. An hour and 15 minutes of trading. 2 or 3 days out of the week with the J signal, you should be done. This morning is no exception. 7:45, we get a sell signal. Check it out. What we have is we had 2 retracement pullbacks. One with an arrow right here. We got another one working right now, target 56, with market profile holding right there. So, but if you look, we had a big trend change this morning around 5 a.m. this morning. We got below market profile, below LVA. We do not buy LVA in downtrends. We're smarter than the average market profile participant. We know that we do not buy low value area in downtrends. That's a no-no. We know that you get stopped out quite a bit doing that. So we're more educated than a lot of market profile traders. So what we do is we let it break below low value area that's on your own Ninja charts. We let it come back into low value just so it doesn't break our black line, our big thick black line. It's not allowed to break our thick black line. And then we look for an ABC short or a 1, 2, 3 pattern short, an Elliott Wave pattern. Okay? Now what you can do is you can look for arrow shorts. So if you look at the first one, it stopped right at my line in the sand. We know we have our own proprietary Renko bar type. It shows a doji or spinning top. Every turn should be either a doji or spinning top. There's our spinning top. I know that after that, I know that a close below that is a sign of weakness. I want to look for a short. So there's the first sign of weakness for short with 5-minute trend. But this one actually showed the exact arrow. The arrow will not fire until I break the low of my doji or spinning top. There's the low of the doji. I told you yesterday, the second bar after the doji is what you want to concentrate on. Sure enough, dead on, after I educated you yesterday to look for that, there's your second bar. It closes below the low of the doji. There's my beautiful, gorgeous Fibonacci dots in a downtrend on a retracement. Sure enough, the fill was 18, depending 19 on your fill. Moves all the way down to 20, $400 per one contract to start out the morning. A lot of you do multiple contracts. You're well on your way to having over $1,000 day already just on one trade setup. Depending on some of you, I know you do 4 to 6 contracts. You're well on your way to having a couple $1,000 day. Good job. We don't have to trade this around the clock. We can just trade this from 7:45 to 10:30. A lot of days are done by 9 o'clock in trend days. These are the days you want to make your money because they're easy retracement trades. We are retracement trade traders. We find the overall trend in the market. We look for my Fibonacci dots to fire off automatically. We look for my automated arrow to fire off automatically. We let my automated market profile show you where the weakness is. Market profile set the trade up. It broke it. My Fibonacci dots, beautiful Fibonacci fired off. Now check this out. Look how accurate this is. Look how the first Fibonacci dots fired off, but it never closed below the spinning top. Look, the wicks don't count. That's for amateur traders. Traders that trade wicks are amateur traders. We're not amateur traders. We know that wicks don't count. You can have a partial body close of the candle. Does not close. We get more fib dots at the high. We know my line in the sand is major resistance, a big black thick line. It can stop it right on a dime. We know my market profile and a retest of low value area in a downtrend can stop in the dime. Did the same thing on crude oil yesterday with a big giant move. And we know a close below the doji or spinning top after we get the fib dots as the entry, whether we get the arrow or without the arrow. This one had the arrow that automatically came up. This did not. Doesn't matter. Close below, you're good to go. And then all we do after we get in, we have our hard stop. We don't take any more risk than $150 per one contract. Never. But we have a black stop line that's even lower than that. Look at this entry right here. When this arrow pops up, there's going to be a black line that comes across the top of the fib. That means if I get in here, I get filled at 18, 19, whether your fill was, and I'm wrong, and it reverses back up, and I close above this black line, partial candle close, I have to get out. I'm wrong. Okay? Diane, you need to pay attention to 3 sim. Educate Diane when the best time to take a 3 sim is, traders in the room, while I do this video. Please educate her. When you close below the low of the doji, right there it is. There's your close. Thank you, Mick. When you close below the low, that's your perfect time right there to get in. Then you can scale with your symmetry dots or your automated deal. These symmetry dots, I designed them. The hardest part for me as a trader is not getting in. I know exactly the exact bar to get in. It's getting out. I had a hard time getting out, and I developed these symmetry dots. If there's one thing I get a lot of compliments about, Gerald and I both get a lot of testimonials about, is our symmetry dots on getting out, because they teach you how to scale. Scaling reduces risk. A lot of traders know where to get in, but they have no clue where to get out. So if you got filled at 1819, what you want to do is, when you see these symmetry dots, I'm like, you come up, okay, when they're here, what you want to do is have your orders in. There's 94. You want to put 2 ticks above 94. 96 was your first out to bail 50%. If you got 6 contracts short at 18, you bail 50% of your position at 96. Okay? Then you let the next runner go down to what? The next symmetry dots. Now at 73, you put your order in at 75. Unless you hit market profile over here on the black chart, you want to take out at 100% or the roller. It's as simple as that. Now I do have a 5 sim Renko. It's been absolutely wonderful, gorgeous this morning. Here's gold. Beautiful trade on gold. We have 2 for 2 on the arrows, just like Crude yesterday. It was dead on. Over $700 per one contract on my 5 sim Renko using an 816 for some of you traders that use 816 targets. Did not have a loser in the morning on Crude from the 7:30 to, what was it, 7:30 to 11:30 range. But if you look, there's my arrow, there's my arrow. Notice how my line in the sand holds on the 5 sim Renko also. Look at the support on the black line. Look at the LVA. It works the same on the 5 sim Renko as the 3. Check it out. So what you do is you put the 5 next to the 3. You have a long-term chart now for the bigger moves. I mean, this is a huge move. I mean, come on, man. That's a $700 move on one contract. This didn't even give a buy signal, all these fib dots. Why? Why didn't it get a buy signal? Because we're smarter than the average retracement trader. We know we don't take wicks. This stopped a lot of amateurs out. See ya. Stop out. This stopped a lot of amateurs out. Got stopped out. We don't do that. Got to be a close above. Then we get a trend change. No trade on those fib dots. But was there a trade here? Yep. Check it out. Look how accurate this is. There's your spinning top. Wicks don't count. No close above. No trade. Here we go. Another one. Wicks don't count. No trade. Here we go. Spinning top right at the low. There's your close. There's my arrow. There we go. As simple as that. Pull yourself in. Let the market pull you in. I'm not smarter than the market. You're not smarter. Let the market pull you into the market. Let the market tell you what to do. Let market profile tell you that this was a support on gold. Let market profile tell you that when you broke below LVA, it's southbound on the Greyhound. You take the first retracement short. It's as simple as that. Don't make it any more difficult.